Steve and Meade again, back with another Bullseye Guy podcast. They're coming fast and furious now. We're going to cover something today around crypto, one of my favorite topics. We're going to demystify the investment of crypto. So again, before we go forward, we have to go backwards, what I call retrospective evolution. And for those of you that don't know, in my background, there's some interesting kind of tidbits. One of which is when I was 22, I went to work at Travelers Group. And those of you who know my story know I read 357 books, 6.5 years, dissected the elements, trained over probably 8,000 salespeople. I mean, we had the #1 office in the country for Travelers Group out of Kansas City and then tried to duplicate in Chicago. None of that matters. Here's what matters. What I was selling was life insurance, fun stuff, mortgages, and mutual funds. Mutual funds had just come on the market. Maybe they'd been around, but people didn't really understand them. They didn't really know what they were. And it was an educational process to educate people on how to invest in a mutual fund. And basically, a mutual fund, for those of you that don't know, most of you do, a mutual fund is you can put $100 in a mutual fund, and that $100 is then split up among many different stocks, sometimes 10 or 20 or 50 or 100. But your $100 is diversified across a portfolio of different stocks. Now, within the mutual fund family or industry, you can also pick the type of mutual fund risk you'd like to have. You can pick a large cap mutual fund. We just covered large cap on the last a podcast. So large cap or large capitalization funds or large capitalization companies, and it's big companies you've probably heard of: Walmart, Ford, General Motors, General Electric. These are big companies, large capitalization, that have a certain rate of return. They're relatively safe. There's a little volatility, but you can look at a large cap mutual fund and try to get 6, 8, 10%, and that's pretty good. Not everybody knows what's in their mutual fund, but they know they've got a fund. Then you might pick a mid-cap fund or a small cap, and a small cap fund's gonna be more risky, more volatile, but a higher rate of return. You might pick a technology mutual fund. What's a technology mutual fund? Your money, whether it's $100 or $1,000 or $10,000, is split among mostly technology companies. So again, where's this going? A lot of investors don't necessarily invest on a single stock. They're not necessarily traders who are going to go research all of the buzzwords: EBITDA, P&L, trailing revenue, run rate. They're not out there trying to be traders, but they're investors, but they're not active investors. We're drawing some distinctions here. They're investors, but they're passive investors. And they're looking at a mutual fund where there's a manager whose job it is to pick good stocks within that mutual fund portfolio to get a good return. Again, you might ask people, hey, do you have a mutual fund in your 401k? Yeah. What are the top 5 stocks? I don't know. What did it do last year? Oh, it did 12%, 13. So retail consumers, what a general consumer is, don't always know a lot about investing at a technical level. They're investing at a higher level. It's less granular. And a mutual fund is a great way to do it. It's diversified, certain segments, certain portfolios. Again, why is that important? We're going to talk crypto. I've done this a lot, but here's my explanation. Bitcoin. Friends of mine come to me all the time. Steven, should I invest in Bitcoin? I don't know. I have 25,000. I have 50,000. Oh, I've got 10,000 for my kids. Should I put it in? Bitcoin. I always ask the same thing. What's your risk profile? What's your time frame? What's your goal? What are you trying to accomplish? Right? If you've got $10,000 for a kid who's 12 or 15, great. Bitcoin, put it in, never sell it. Put that money in a Bitcoin fund and let it grow. And when your kid's older, he can borrow against his Bitcoin to go buy a car or go to college or buy a house. It's a great long-term investment. If your risk profile is a little higher, Bitcoin to me is interesting. I like it. It's, You know, it was at 50,000, then it was at 60, now it's down at 40. It goes up and down, but I could see it going to 100,000. I did a podcast on it. I thought it'll get to 100,000 in 2021. I still have a chance. We're in May. But again, 50,000 to 100,000 is double your money. That's interesting for me long term, but it's not the kind of risk profile I want. I'm willing to be more aggressive. I'm willing to take a percentage of my portfolio or my investment and move it into a different asset class, just like a mutual fund. I might have a large cap mutual fund, again, which invests in big companies, but I might take some of that and put it in a technology mutual fund or emerging markets. You know, an emerging markets fund might invest in Vietnam or Malaysia or these other countries that are going to experience higher growth than the US might. Again, where am I going with that? I'm going to do a little share screen here. I hope this works. This is a product that we're launching. I have created this. Going to launch it in conjunction with, there we go, a little screen share, as long as the recording's working. We are in good shape. In Dubai, actually out of Estonia, but Dubai, Centurion Investment Exchange. What is Centurion Investment Exchange? It's a crypto exchange. What's a crypto exchange? It's an exchange that lets you trade crypto. Is that confusing? No. In America, we have TD Ameritrade. We have Charles Schwab. We have E-Trade. Those are all platforms. If you want to buy stocks, you can go on TD Ameritrade and register and deposit money, and then you can trade stocks. You can buy Apple or Walmart or Dell. And if you want to research other stocks, you can. And TD Ameritrade has analytics and candles and wicks and all kinds of things. And you might do more research and pick. Or you might say, you know what? I'm just going to pick a mutual fund and be done with it. Crypto investing should be the same. Again, my friends come to me, oh, 25, 50,000. I've got friends that are what are called RIAs, registered investment advisors, family offices. Oh, I have clients that want to invest in crypto. Should they buy Bitcoin? Should they invest? How? The confusion is about to be taken out. Here's the crypto concierge. Investing is easy. Register with CIX, Centurion Investment Exchange. Deposit your money and pick your risk profile. What do I mean by that? It's going to be asset allocation and a diversified crypto portfolio like a mutual fund. Again, I use this retrospective evolution. Let's look backwards and see what worked and move forward to use new technology in a fascinating new way. Crypto Concierge, it's going to allow you to pick your investment based on risk profile. How about that? What do I mean? Well, if you're a low risk kind of guy, my friends are like, oh, well, I'm low risk. Great. In traditional markets, you might invest in a large cap fund, the New York Stock Exchange, and it's going to be a bunch of companies you recognize. Again, Walmart, Ford. I don't know if Amazon is on NASDAQ or New York Stock Exchange, but you get my point. The medium risk, again, is correlated to the NASDAQ in the United States. And these are more technology companies, Microsoft, ones you've probably heard of, but a bunch of them you might not have. And then over here, if you've got a high risk appetite, you might invest in the OTC, the small caps. You're looking for a 10-cent penny stock that can go to $1, which is easier than Amazon going from 1,500 to 15,000. The return is the same. The risk profile is different. We're going to look at allocation across risk profile, or we might like eco, environmental. This is what's called a segment fund or a sector fund, things that are eco or environmental. How's it work? Again, these aren't the final screens on the product, the web page, but conceptually it's just designed to show how it works. And it's so simple now. Crypto Concierge. You're going to move a balance into a wallet, your deposit, just like you might in TD Ameritrade or Schwab. Then you're going to allocate your dollars as a percentage across your risk profile. Say, all right, I want 10% in the low risk pool, 15% medium, 50% in high, and 25% in eco. Now your $10,000 will be allocated into that investment pool. And the screens will show you some simple things. Your initial deposit, what your current balance is, and your rate of return or your percentage since you've invested. This to me is simple. I can look now and go, wow, I've earned 28% in the low risk pool, 56%, 87 in the high risk, and my eco funds return 22. I can now make better decisions about where do I want my money, what kind of risk, what are my returns. The other screen is going to show me what's called load balancing. I like educating people. The investment people know this. A lot of people don't. Load balancing means when I started with Crypto Concierge, I was 10%, 15, 50, 25. That was my allocation. But as the fund's grown, right, because the low risk fund is returning a lower return and the high risk fund is returning higher percentages, my balances are now out of alignment. I'm at 73% in my portfolio, 10, 6, and 11. I can let that ride, or I can choose to rebalance by moving the funds around. But we are democratizing investment. Now your low risk pool, if this were a low risk, high cap or large cap mutual fund, again, it would have companies you've heard of. How does that work in crypto? It will invest, the fund will create a portfolio like a mutual fund, and the portfolio is going to have some crypto you've probably heard of. Bitcoin, Ethereum, Bitcoin Cash, BCH, gold. Some of them you'll heard of, some of them maybe not. Just like your mutual fund, there's some companies you've heard of in your fund, some you haven't. When we go to the medium risk, again, the crypto works the same. I liken this to NASDAQ, but the medium risk here are Link, EOS, Ripple, XRP, Litecoin, Stellar, which is XLM. Again, some of them you may have heard of, some not, but you're investing on risk profile, risk pool. High risk, these are the penny stocks. These are the stocks on the OTC, over-the-counter, micro-cap, penny stock, pink sheet. These are the companies that are at 2 cents and you want to go to 10, or 10 cents and you want to go to $1. But how does that work in crypto? Same thing. Dogecoin, right? The dog. A lot of people are excited about it. Doge, I got in at 4 cents, got in a little more at 7. It went to 70 cents. It's back down to 40. It's been a good ride. Polkadot, Uniswap, Yuki. You may not have heard of these as, quote, crypto, but you don't need to understand how crypto investing works any more than you really need to know how your mutual fund investing works. If you're investing in a mutual fund for the diversified risk and the potential return, crypto investing should be the same. If you want to figure it out, you can, just like if you want to go research a bunch of stocks and do it on your own, you can. But if you want to democratize the investment to, quote, invest in crypto, we've done it here. And then same thing in the ESG, the eco, the sustainable portfolio. If you allocate a percentage of your money, WazX, I love this one, Steve Wozniak, eForce, they've created a, quote, climate coin. Mining, these are hydrogen Bitcoin mining, where the Bitcoin mine is set up on the hydrogen water. BT, I don't even remember what some of these are. We had to look up, but it's just a sustainability fund. Basically, that's all it is. You're going to allocate your money, deposit, allocate, earn money across the percentages. The fee structure, it's a payout to the exchange monthly, only on funds that have earned. So if the fund doesn't perform or it's down, there is no fee. But if it makes money, this is a shared success model. And then we actually created a referral program. I love this one. If you join the Crypto Concierge, again through Centurion, as a retail investor, an individual, you get a referral code, not an MLM. This is a promotion code. We want you to help us grow the company. So you'll have a referral code. It's called an affiliate code. And if your friends sign up and use your code, you'll actually get paid off of the fees collected only when your friend makes money. This is a shared model. And we have what's called an RIA referral. This is a registered investment advisor. I'll spend a little bit of time here again. RIAs are people or groups that manage other people's money, helping them how to redirect. So if you're an RIA and your clients are coming to you saying, I want to invest in crypto, and you're saying, I don't understand it, or we don't invest, or we don't know enough about it, the Crypto Concierge can solve that problem for you. You can basically say, hey, we're going to move you into crypto based on your risk profile, and it's going to allocate your money across a basket of crypto just like a mutual fund. We've now provided you a simple explanation and simple onboarding for the referral program. That's it. The Crypto Concierge, simple, easy onboarding. Jumping back out here. Why is this important? Well, part of it is personal. I've had a goal for many, many years. Sandy Weil, who again, I used to work under, I met Sandy once. He wouldn't remember me, but fascinating guy. But one of his companies, I believe this is correct, it may be a legend, but when Sandy Weil took his company public, he had 1,000 people who worked for him become cash millionaires. Janitors, secretaries, basically changed their history and their financial history, not overnight. I mean, it was a journey with the company, but they became cash millionaires. So one of my goals was I wanted to build a company or have an opportunity to have 1,000 people become cash millionaires. And for a long, long time, I thought, oh, I have to build a company to follow in Sandy Weill's footsteps. However, I've learned the universe gives you exactly what you ask for. Just be specific, work hard, but remember the universe also has a sense of humor, so you have to be careful. But what I realized is a couple of times I had a public company and I went, wow, as a public company, I could have stockholders or shareholders or people that might buy a stock in the public company at 10 cents or 20 or 50 cents. And it goes to $1, $2, $3, $4. And I could have 1,000 people become cash millionaires off the company I built, but not through stock, but through public. That was interesting. When you move out into crypto, the numbers astronomically multiply. There are more crypto millionaires being created, more individual retail investors becoming millionaires because this asset class of crypto and tokens, which to me are like penny stocks, they're volatile, they're risky, they're driven off of personality and promotion and memes, but there's opportunity there. And that opportunity, what we want to do with the Centurion Exchange and the Crypto Concierge is my goal is to have 1 million people sign up, deposit money. We put the minimum at $1,000. And again, for some people, that's still a lot, but it's not a $10,000 or $25,000 or $50,000 or $100,000 minimum like most brokerage firms are. It's a $1,000 minimum. Put $1,000 in. Put half in low risk if you're worried, half in the high risk, some in medium, some in eco. Diversify, allocate your funds. But the goal is, can I have, and yes, that's an I, a we with Centurion. Ali Kassab, the CEO, has been amazing, but it's a personal goal of mine. I want 1 million people to have a wallet with Centurion Exchange, the asset allocation, and become cash millionaires. So my mind's grown. I went from 1,000 to 1 million. Technology enables different things. There's more opportunity. There's great ways to be able to actually grow and have people come on. So let's look at this again. The investment structure. What is crypto? Cryptocurrency to me are not currencies. Bitcoin is not going to be a global currency. And I know people will fight me on that. It's okay. Everybody's got their own opinion. But I don't believe it's going to be a global currency. I believe it can perform a function of payment, a method of payment in some situations, but no different than gold. Gold is an asset you invest in, and gold is a form of payment. Some people will accept gold. Now, gold's not very portable, not very divisible. If you have a gold brick, an official brick, bank brick, that's $500,000, $600,000, kind of hard to carry that around in your pocket. You could have a $250 gold inglet. You could have a $60,000 small gold bar. You could have a $50 gold coin. But if you have a $50 gold coin and you're going in to buy a $12 sandwich, yes, I live in Beverly Hills. Sandwiches are expensive. But if you're going to buy a sandwich, it's hard to break that gold piece up. Bitcoin is instantly divisible. It's instantly portable. It's instantly transferable. But they're both forms of payment. The other thing I hear about Bitcoin versus gold is, oh, well, Stephen, with gold, you can at least make earrings. Gold makes something. And I look at people say that, like the esoteric argument to me is a fallacy. I look at them and I say, when's the last time you invested in gold, if you even ever have? If you invested in gold, why did you invest? Because it makes earrings or because you want it to go up in value? So these esoteric arguments that, oh, gold can make earrings, that's just invalid. You invest in gold because you want to hedge against inflation or you want it to go up in value. That's it. That's gold. That's why we invest in gold. That's what we want it to do, not because it makes earrings. But it can, but it doesn't. The other one is, oh, well, Bitcoin doesn't make anything. At least Apple makes something, or Amazon sells something. Again, we're making false comparables. We're not saying Bitcoin is like Apple, that it makes something. We're saying Bitcoin is more like gold. And last time I checked, how many employees does gold have? None. Gold has no employees. Gold has no P&L. Gold has no EBITDA. Gold doesn't make anything. Gold is gold. Gold is the asset. So it's a cool asset. It's a great investment, but it's not a currency, and it's a tradable unit. Cryptocurrency to me, again, are like penny stocks. Now, why do I put them at the penny stock level? Again, if you watch my prior podcast, New York Stock Exchange, big cap, large cap companies, by the time a corporation goes public on the New York Stock Exchange, it's 7, 8, 10 years. It's an Uber, it's a Palantir, it's $100 million in profit, it's $1 billion in sales. They're big companies, different evaluation, different asset class, different risk profile. NASDAQ, again, different. OTC, early, risky, volatile, less volume. The retail investor, the speculator, the gambler is down at the OTC level. That retail investor who's looking for a bigger rate of return, has a bigger asset appetite and risk appetite, is down at the OTC level. They may have some up in the large cap. That's why we built the Crypto Concierge. You as an investor can now say, what's my appetite for risk? How do I diversify my portfolio across risk, and let the managers decide where to allocate those funds in the portfolio, just like you allow a manager to allocate your money in a mutual fund. If you want to be more active, you can go in the US, go to TD Ameritrade. Go to Coinbase if you want to buy crypto. If you want to buy Dogecoin on your own, or Chainlink, or EOS, or XLP, or Tron, you can do it. Go buy it. If you want somebody to manage it, it's a little different structure, but the democratization is there. Don't let people mystify you with blockchain. I joke all the time, the projects. I say the blockchain world is full of 5 B's. Baffle, babble, and bullshit. Baffle, babble, and bullshit. But if you get past that, there might be something brilliant there. Most of the blockchain crypto world is baffle, babble, and bullshit. It's a currency. It's not, in my opinion. They act as a form of payment in some situations, but they're a tradable asset. And once we understand that, the opportunity to invest becomes much, much easier. All right, so I'm not going to keep going. Normally, these are 30-minute podcasts. We're going to cut this one a little bit short because simple. The Crypto Concierge, easy concept, easy system, easy allocation, good rate of return, we hope. But there's risk in investing. There's risk everywhere. But the exchanges have been doing amazing. The volatility, the returns are incredible. Will they stay that way? I don't know. I'm not a fortune teller. I can say this, though. I moved a percentage of my funds, my holdings, not all of it. Again, I like risk, but not 100%. That's why we have the allocations. And I moved a percentage over into the high-risk fund, the high-risk pool. I have a trader who has been trading crypto for me. He's trading the high-risk, the Doge coins of the world, the Uniswaps, the Polka Dots. A lot of them you haven't heard of. There's many I haven't. He's trading Bitcoin futures. But the return has been close to 800% in 90 days. That to me is fascinating. But when I moved the money over, I was willing to risk it all. It's high risk. You go, oh, what if you lose it all? You're right. That's the risk of investing. But the diversification limits your risk. I'm not investing in one stock in traditional or one token. It's a diversified portfolio. I'm willing to take that risk on a high risk pool for high returns, but I have a professional manager whose job it is to manage that. I could do it on my own. I don't want to spend my full time reading charts and having multiple monitors and trying to figure out candles and wicks and investment structure. Not what I have time for. I'm building a company, but I like to invest, but I'm a passive, educated investor. I'm not an active investor trader. And there lies the difference. So Crypto Concierge is coming. Super excited. We're going to share it with everybody. Hopefully it'll be out in 5 days. Today is the 20th of May, 25th, 26th, somewhere in there in Dubai. The Crypto Concierge wrapping up. Stephen Meade, the Bullseye Guy. Thanks as always for tuning in. See you next week.